Good evening, everybody. It's Michael here from the Trading Institutional Order Flow thread on Forex Factory. Hope you're all well. It's the 11th of April 2018. Um, an update video to the one that was posted on the 5th of April. We're going to go through the usual charts that we go through as usual, starting with the US dollar. I've left the charts obviously untouched since we last met, so we're just going to look at what's played out and how it's all played out since the last video on the 5th of April. So let's get started. Lots to go through. So this is the US dollar. As we pointed out the last time, we are still stuck in that range. Looking at the weekly view, the demand levels are still holding. Supply is still holding despite us testing this 3 times now in total. So we're coming back down again, now in between levels. And you can see the last time we met, we had the demand zone marked out here. We were looking at this area and thinking potentially this might be the one that will cause the breakout. We had an immediate return to the level. You can see we tried to bounce from there, but it broke through. So that level wouldn't have been tradable anyway. It would still not have been a good idea to, be looking to sell the US dollar when it was down in here because there was no way to know whether it was going to hold or not. It's since come through and it's come down quite rapidly, just the way we like, into the demand level. The issue I have with the demand level, the only issue is where it's located relative to the weekly levels. It's a bit in the middle of everything. But for short-term income trading, it could still be very good actually, and it may still cause us to have what we are thinking may happen in the US dollar with a pop out of this range that we've been in. So definitely not an area to be looking to sell the dollar. Probably more likely area where we would be looking for shorts in the euro. Okay, so let's go to the euro, looking at where we are. So the euro itself now again bouncing off of the demand level. It's gone through that whole ugly supply that we had in there. We are on the weekly chart stuck again at these high levels with supply holding, demand breaking, but not really going very far. We have a sideways movement in there. So the level that we have here is in here, where this is the opposite to the US dollar, where it's coming into a level of supply there. So possible short-term income trading in the euro coming up likely in the next few days. So keep an eye out on that one. Looking at the Australian dollar, we've come down closer. We still haven't hit that demand level on the weekly that we pointed out. What we have done, as we were saying last time we met on the 5th of April, is this area which was holding up price. We drew the trend line to see what would happen, and obviously we've now had the pop out. So we're now left with potential buyers down at this level down in here. This is where we're left with potential buyers. So we still have a bit of work to do to get above 77.85. That would be ideal. But for now, if prices come down, we probably will be seeing a little bit of buying coming in here. It may not be enough to turn it around, but it's definitely worth keeping it on your chart and trading accordingly when prices get down here. And the pound US, we are still up in that supply. We are pushing higher. We've come up to the supply zone, so short-term income trades, potential ideas on shorter time frames in here now for short-term income trading. In terms of the big picture, we're still obviously in that uptrend. We're still forming demand zones now, so potential demand coming down into this level here. So we are not in an area where we want to be aggressively buying. We may want to look for shorts or just wait aside and see if we get a push out. If we start to come down, then we may look to engage it on a smaller time frame. But definitely not an area to be buying the British pound against the US dollar. That would have been better done down in here. Okay. New Zealand US, again, coming up into a pre-tested area. We have potential new demand forming. It's not the greatest because it does have a bit of a wick to it, but it's the one that's immediately below. We're coming up into a previously tested area. working off of big picture weekly demand going higher. So again, the shorts will be a bit on the aggressive side, but if it's for short-term income trading, you're definitely in the area where you want to do that rather than buying. And the US dollar Canadian, we're deep now into the level. So you see, we've gone through this initial level, we've come down to the lower one, and we're beginning to get a bounce. This level would have been interesting to look at because of what had formed above you. You may have wanted a deeper penetration into it before you traded it. And this level has now been blown through, so we'll remove this area. That for short-term income trading, I doubt you would have had much in the way. In fact, maybe we should just have a quick look, see if we did have any. Let me just go down to a smaller time frame. I don't know, say the 15, and take a look, see if you had the opportunity. So you could see on the 15, if you were waiting for confirmation, this is the whole daily area. You didn't get any confirmation, and you would have needed confirmation on the daily chart, obviously, because you were in a downtrend on the daily. So you would have been waiting for confirmation, which you didn't get, which is why I always point out, or try to point out on the thread, that you may or may not get the opportunity. That's why it's important to be aware of those zones, and then to start looking, as I always say in my entries on the thread, start looking for opportunities when you get to these levels. They may or may not appear. In this case, they didn't appear, so you wouldn't have taken any trade there anyways. Um, so we're now down at that level, so obviously starting to look for buying opportunities would be the higher probability trade. We do have supply above us, so watch out when you start getting closer to these levels up in here. You may start to get interested sellers coming into the market. Um, that level, that one, I'll just take the up a bit of it there as well. So keep an eye out on those levels, and ultimately we have that one above. In terms of the weekly, I think we need to be mindful of this entire area. I'm just going to put it like that. So coming back up into that area, it's definitely not an area where you want to be taking long positions as well. And the US dollar Swiss, so we've come down to the level that we marked off. We're beginning to rally into it. We're in an uptrend on the daily. On the weekly, we're also forming higher highs and higher lows. We are yet to take out a supply zone. If you include the gap in that, it's quite a wide zone, or you could break it up into two levels. That one's a wick, so we wouldn't include that. That one wouldn't count as a supply zone for us, but let's leave it at this level if you include the gap. So you are at that level now. You've had the pullback into the demand. The demand isn't broken yet, so shorting is still a challenge because you have the demand levels still holding. Right, so watching that area. If you were going to short, I would say maybe going back, maybe making higher highs into new, fresh orders into this level, and obviously into that one higher. Um, See how you get on with that. In the US dollar Japanese yen, not much change since the last time we met. Still batting its head against a multi-tested supply level here. Demand levels are trying to hold. It's a lot of back and forth between buyers and sellers on this one. So no clear trades there. And on gold, we finally today had a push out. So today is the 11th, the 10th, which was Tuesday. This was Monday. And then this was, so where's the 5th? So this was where we were down in here. We tested that level and we've broken right through it. So now obviously we will remove that one. And we were saying, if you remember, we talked about the big sideways pattern that we have here on the weekly chart and the potential for this to be a breakout to the upside with the holding pattern that we found in here, with the prices just refusing to fall lower and being held by a demand zone, just refusing to break below that one, and it's eventually now beginning. It's back up to the highs of this. Let's see if this push today with FOMC coming out in a couple of hours, we'll see if we get a push to new highs, in which case you can bet that a lot of alarm bells will be going off around the world for gold as a breakout. In terms of new demand levels, we do have a new level formed right here. So definitely one to keep an eye on. Hopefully this closes well above to the highs, but watch it because it's still moving. It's a daily candle, so you want to ideally wait for it to close to definitely show you that yes, it is a big enough imbalance for you to trade. Okay, so we'll keep it tentatively. In fact, maybe we let's just put a circle around it just so we know. I'll just put a circle around that area. Okay, let's go to oil, and oil has also been breaking out. We see the level there, so that was the area we talked about. It's broken out. That supply did not hold. It's been quite powerful with the weekly pushing it. It's making new highs now. Looking at it on the big picture, you can see the uptrend is continuing. Demand zones are continuing to hold, like we were discussing when this market was down in that at that level last week. So now we've had the push up, and we're going much higher and higher now. So obviously looking for buying opportunities on smaller time frames. Ideally, I would want us to eventually push because as long as we remain into this supply, there is still always the risk to go in terms of going long. As long as we still have this intact, it's still always a challenge and a bit riskier to go long. So we would want to pull back possibly down to somewhere in here, maybe on a smaller time frame. Let's take a quick look, see what's on the 4 hour. So we have levels down in here, a bit in here as well. That one's not such a great structure, I don't think, but I prefer these two. Looking down in here on a 60 or a 120 may give us a better opportunity because you'll see they'll be located much better relative to where the weekly levels are. Okay, so that's WTI. Same for what happened to our levels? Same for Brent, really. It's pretty much the same chart. It's also broken out of its range up in these parts, and it's actually gone much more parabolic compared to the WTI. Imagine there's some levels in here. Just take these out because I can't see them on the weekly. So we have, oh, they're just not showing here. Oh, there it is. So we have that level that prices just didn't get to before popping. So again, definitely bullish on oil. The question is now looking for quality entries. So definitely one to keep on your radar whilst we're looking for quality entries in that. And looking at copper, copper's into the short-term um, supply area. Looking at it on the weekly, it's not the greatest, so definitely want to look for confirmation entries up in here. It's overall still in this sideways pattern on the weekly. It's not the greatest. This area is also, the structure is not that great. As I said, looking at it here on the smaller time frame, it doesn't show clear levels. So if we are going to go short in here, I would rather use confirmation entries, me personally. Um, Definitely wait to see the selling because we are also in a sideways pattern and this level is in the middle of the move. And then looking at the S&P 500, the market has had a fairly decent couple of days. The point is, as I was pointing out to the guys in the roundtable when we were analyzing this chart, even with the bullishness we've seen so far, which is good. I mean, a lot of our colleagues who look at chart patterns I've seen on the internet where people are looking at this as a potential head and shoulders. Obviously, it's not complete. It's not a complete pattern until you have the neckline, which would be around there broken. We tried to have a go at it yesterday, sold off a bit today. We're now back close to it again. So I'm sure, like I said, a lot of alarm bells will be going off around the world if we do break that level, and a lot of people are watching this. We have supply levels above us. That one, I prefer the ones above for short-term income. Looking here on the daily chart, I'm just going to combine two levels there. That one I'm not so keen on just because the structure is not great over there. So looking on the weekly, we still have supply above us there. We have some here as well. We're obviously looking at a level on top of level scenario. And for the demand, I'm going to go a bit lower and just combine levels here. Um, so that's what we're looking at on the S&P 500, waiting to see what happens if we fail to break this area and go higher, then if we come down, you can be sure a failed move, as they say, often leads to a fast move. So it may be one to keep on your radar for sure. The Dow, supply above there, similar chart to the S&P. The head and shoulders pattern that people look at is not as well defined here. In terms of supply, it's much messier than the S&P, and you actually don't have any fresh levels till you start getting much higher into the upper um, of the upper supply area. So I'm gonna take that one out, and because I don't see any quality there. To the downside on the daily chart, we have a bunch of levels down in these areas. That's where I would be looking at. Just going to combine again all of them down in here. This will tie up with this one here. So we do have some levels that if we do start coming down may result in short-term bounces, but obviously we're also probably going to form supply if we do start coming down. If we start going up, we're going to form demand zones. So be mindful of that. We have broken demand on the weekly, which is a big event which happened. We removed quite a few of them. So the weekly, technically following the rules of the methodology, is in a downtrend. We have two demand zones removed, maybe even three if you count these ones as separate to each other. So we are in a downtrend. What we haven't established is downside momentum yet. So we'll see how that goes. Okay, so that was a quick run through. I spoke faster than I usually do there. I'm trying to get it all in. I hope it's useful for you guys. Thank you all for continuing to share your ideas and speak with each other on the thread. It's been great reading your posts and sharing with you guys as well. So thank you to all of you. Keep them coming. Share the videos with your family and friends. And let's get more people trying to get financial freedom trading for themselves. Take care, everybody. I'll speak with you guys again very soon. Bye for now.